You know what you look like you could use? Some short squeezed cheesecake. Hey, how's it going? I'm Russ, your favorite welder that's passionate about passive income. So I thought we'd do something a little bit different and introduce something new to some of you, which is the concept of a short squeeze. So to understand the short squeeze, you have to understand what short interest is. And all that means is it's people who are betting that a stock price is going to go down, so they borrow and sell shares hoping to buy them back later at a lower price if and when that stock price does go down. Now, a short squeeze happens when the share price goes up instead of down, and the people who borrowed and sold the shares, which are called short sellers, might panic and try to buy back the shares that they borrowed, making the share price go up even faster. So I was poking around on seekingalpha.com, and as you know, most of us love Seeking Alpha. I thought I'd show you just a little bit about it, and if you don't want to see a little bit of Seeking Alpha and an interesting pick or two, then just hit the timeline below and go right to the 4 short interest stocks. So what you're looking at is going to be everything with a premium subscription, and on October 1st, Seeking Alpha is going to increase their premium price 25%. So if you're on the fence, you can lock in that price, but with my affiliate link below, you'll get $25 off your first year plus that 7-day free trial. And I think it's really worth it. You should at least do yourself the favor and try the 7-day free trial. But Seeking Alpha has been invaluable for mine and many other investors' education and helping us to get ideas for investments. And on the homepage here, there's trending analysis, trending news, really nice place to start. And the way I've customized it and set up, we have some dividend growth ideas right there, some analyst opinions that are strong buy, T. Rowe Price, ticker TROW, and Torm PLC. So there you go. Some analysts gave those to a very strong buy rating. But then we got your earnings calendar on my stocks and notable earnings, as well as analyst articles that were written. There you go. Sell AT&T, they say, but buy NVIDIA and Tangier Factory Outlet. And then for all 11 sectors, they have this cool quant rating, which is their algorithm. Large cap, mid cap, and small cap. It's broken down into those 3 categories. So a really quick snapshot if you wanted to look at, consumer discretionary stocks and see maybe you want to buy General Motors, Carnival Cruise Line, or Toll Brothers. Or if you want to go to the small cap because you think small cap is going to outperform, hey, maybe Land's End is one for you, ticker LE. There's so much to show you. We're still on the home page. You can link your portfolio, which I have linked mine. So there's my portfolio movers. They give you ideas, ETFs for income investors. There you go. Popular ETFs, SCHD. BND, the Vanguard Total Bond Market Index Fund, top-rated ETFs by their quant, by their algorithm, and some safe dividend ideas, which were analyzed by Seeking Alpha analysts, and there's so many of them. There's always new content coming on all day long, every day. A couple interesting things here too are these investing groups. The first one has been popular, Alpha Picks, which are hand-picked stocks that look like they're at a good spot to buy, and they update this often. And I'll give you a peek into their portfolio, which has had a total return of 115% compared to the S&P 500's 46.9%. And if we sort by picked, their newest picks, 3 of them are strong buys: Synchrony Financial, ticker SYF, Zeta Global Holdings, ticker ZETA, and Reinsurance Group of America, ticker RGA. And then you'll see the returns. And if we sort by return, their best was picked on December 15th, 2022, Modine Manufacturing, up 438%. Now, another interesting thing is these investing groups that you can also subscribe to, such as High Yield Landlord, which is our guy, UCS Gola. Check this out, Trade Alert. Now, this is a premium service. It does cost a little bit. I got you covered too if you want to check these out with a 20% off affiliate link below. So you can pay $3.99, right, instead of the $499. I think this is more for serious investors because you get their updated, for your eyes only information, but they also have their own chat rooms with the investing group leaders that will be in it, and they will reply pretty quickly. So it's almost like getting instant access to some of these investing group leaders and people with very specific knowledge. But in their core and international portfolio, I'm going to share one with you. Check it out. They just bought 360 shares of RCI Hospitality, ticker RICK. Yeah, they do strip clubs. And as UC says, he had an interview with the CEO of RCI Hospitality and talked about a few things that they are doing around there. But one little bone to pick, it said that they are aggressively buying back shares, but when I hop on over to Simply Save Dividends to check out their share count, see that they've raised dividends pretty quickly as of late, and they're going ex-dividend September 16th. Low free cash flow payout ratio of 9%, but shares outstanding were at 9 million in 2021, currently at 9.35. So unless they got something coming on, it doesn't really look like they are aggressively buying back shares to me. And then the other group here that I'm subscribed to is the Dividend Freedom Tribe, which is a father and son team of Robert and Sam Kovacs. And we'll pop in and look at their last buy list, and I'll share with you that they moved from the watch list to the buy list. Best Buy, Canadian Natural Resources, ticker CNQ, Ares Capital, which we do own, Regions Financial, and Owl Rock Capital Corp. And then they had a really nice write-up on Bristol Myers Squibb that is for your eyes only as a member of these groups. So again, if you have a little more money laying around, then these investing groups might be something you want to look into. And hey, save 20% if you want. Or don't. I don't care. I'm going to be fine. You can just take all this information for free. So this video could be an hour long going through everything that Seeking Alpha offers. But I think the most helpful things are the analyst articles, the recommendations from the analysts and the quant. And also, I really enjoy the comments in every post. The comments are where it's at, where people push back. It's just a fantastic community. Now we have Find and Compare here on the left. This is where you can get a lot of fresh ideas. But if we hit Stock Screener, you have a lot of different categories, like the top quant dividend stocks. And here's a few of them for you, rated by the quant rating in descending order, which I know Jim Betts likes that. Tyson Foods, ticker TSN. Top dividend stocks, growth stocks. Again, we could be here all day doing this, but I was scrolling all the way to the bottom, and what did I see? Strong buy stocks with short squeeze potential, which are stocks that have a quant rating of strong buy and over 10% short interest, which means that over 10% of the available shares are borrowed and sold short. So if the stock price starts moving up, you could have a whole bunch of short sellers rushing to buy back shares at higher prices, which is going to help push the share price up even faster, hence the name short squeeze. So they have 17 such stocks, and there was a couple with dividend yield. So if we sort by dividend yield, we've got 4 of them right here. With the first one being, oh my gourd, everyone gets a reward, Cheesecake Factory, ticker CAKE. Now, it's pretty self-explanatory, right? Cheesecake Factory, hey, they do cheesecake, they do food, pizzas, pastas, more than 250 dishes freshly prepared from scratch to order every day. And then obviously their cheesecake. So let me know if you've been to a Cheesecake Factory, and hey, what might be your favorite thing to get at a good old Cheesecake Factory. So I did verify all these on finviz.com, which is another great site for getting some quick information. But if we zoom in, we see that the short float is 11.92%. So almost 12% of the available shares outstanding for Cheesecake Factory are currently borrowed and sold short, which would be 5.61 million shares out of the 47.02 million shares available. A couple quick numbers for you we'll go through on these. Cheesecake Factory, current dividend yield 2.94%. Unrated on Simply Save Dividends. Doesn't mean it's unsafe, so we just have to do a little more digging. And remember, the Simply Save Dividends safety score is just their opinion. Now we see during the pandemic that they did downgrade them to unsafe because they ended up cutting it to 0, but they've been growing it right back to almost where it was. It's a frozen dividend right now, but if you like Cheesecake Factory, it might be a good investment. Except the free cash flow payout ratio is at 95%. That's pretty high. We want to see it get back down to those 40s, preferably around 50% would make me feel a lot better. So hopefully they will indeed bump that free cash flow up, as it shows the next 12 months should be 34%. We'll see if that happens. It does look like they issued shares to bring in more money while they were closed down to help cover things, but it looks like they've started buying those back. But their margins, just okay. And their net debt is a little bit high, but they are easily able to cover the interest on that debt, which again, if you're new around here, interest coverage ratio of 19.31 means they have $19.31 of operating income to cover every $1 of interest expense on their debt, so they can easily cover that. And that has a quant rating of 4.52, but the Wall Street and the Seeking Alpha analysts both give it a hold rating. Oh, next we've got ticker BBW, Build-A-Bear Workshop, which I remember this from my kids, that you've seen these stores all over the malls and everywhere. You pick a bear, you build it, you put a special message on their heart, and they cost Papa a lot of money, but hey, they put a smile on your kid's face, so it's worth it. But look at that. Rep the teams you love this football season, and look at that. The Dia de los Muertos bear has returned. That's freaking cool. Checking the short interest on Build-A-Bear, 15.08% of the shares are currently sold short. Now, they did start just paying a dividend, but they have a current yield of 2.56%, and they've only made a couple dividend payments there, so brand new dividend paying company, and their free cash flow payout ratio, only 7%, so that is really low. That free cash flow of $2.69 can easily cover the 80-cent annual dividend per share, and they've even been buying back their shares, currently down to 14.1 million outstanding. We're going to go fast, so pause this if you want to look at any of these numbers more in depth, but return on invested capital and return on equity both really high, so those margins are really nice, and their net debt has been coming down quite a bit, although it did jump a little bit here, and I would love to see that interest coverage ratio a little bit higher. But Build-A-Bear Workshop, interestingly enough, looks pretty solid as a new dividend stock. The Quant and Wall Street both give it a strong buy, and the Seeking Alpha analysts give it a buy. And it's interesting, just a lot of this analysis, buy, hold, buy. So that's one that you might want to take a peek into if you want an easy to understand business to invest in. And I do have them on my watch list. Next is you. You're next, ticker YOU, Clear Secure. And if you've ever seen those people zip through the airport lines that you're standing in like I have, that's exactly what Clear Secure does. They use that cool tech like fingerprints and eye scans to quickly check your identity. And it's not just for airports. They're working on getting you through lines quickly, like sports stadiums and even some office buildings. They want to make long lines a thing of the past. Now, Clear Secure has a whopping 21% short float on that. So that's one that if things start taking off and you get short sellers panicking, I would not be surprised to see this thing just rocket up. Now, Clear Secure also started paying a dividend, and it has a current yield of 1.36%, also unrated. It's a mid-cap company, $2.74 billion. They've already got a few dividend increases under their belt. In addition to that, some special dividend payments, one in November of 23, one in April of 24, and kind of like Build-A-Bear, really low free cash flow payout ratio. Free cash flow per share has been going up nice and to the right, but sales growth still an impressive 32%. Yeah, they've been diluting shareholders a little bit, but they're a newer company and their shares outstanding are going up, but so are the total sales, and they finally have a really high return on invested capital and return on equity, so their margins are all very nice, and according to this, they have no net debt. And U has a quant rating of 4.9, which is really high, and of course the strong buy. Wall Street analysts give it a hold, but the Seeking Alpha analysts give it a buy. And last we have Powell Industries, ticker POWL, which they're like the backstage crew for electricity, making that big and important equipment that controls and protects electrical systems. So think about all the power it takes to run a factory, an oil rig, data centers, a whole city even. Powell Industries is the ones that help manage all that, and they're pretty much the unsung heroes of keeping our lights on and our gadgets charged. And Powell has a short float of 16.23%, so they're up there too with that short float ratio. And Powell Industries is also unrated with a microscopic 0.63% dividend yield. Now, you're not going to buy this one for a growing dividend, that's for sure, because they have microscopic dividend growth, raising it about a penny every year, so that's just token. Not going to cut it, but if you think that they could short squeeze and they could take off, could be an interesting investment to look into. Their sales growth has been climbing though. They have 12.2 million shares outstanding. They've had really nice return on invested capital, return on equity. All their margins look really good as of late, and this also shows, according to SimpliSafe, that they have no net debt. Now, Wall Street gives Powell a hold. The Seeking Alpha analysts give it a buy. And on September 9th, research-wise, gave it a strong buy. So this would be one you'd have to look into. Honestly, I'm not turned on by this one as a dividend growth investor. If I'm buying a small yield like a Visa, I want big dividend growth. As you see, Visa's yield is 0.73%. But come on, this is just dividend growth porn right here. That is sexy. 18% 10-year CAGR, 16% 5-year CAGR, and they last grew at 16% in October of 23, which means we are about to have another dividend raise in the month of October from the one, the only Visa. I love you, Visa. And look at their free cash flow payout margin. 22%. Sorry, I couldn't help it. I just couldn't help it. Their free cash flow per share, almost $10 a share. Sales growth is almost always in the double digits. Constantly buying back shares. Total sales going up and to the right. This is just everything you want to see. Stupidly high margins. Return on invested capital when it's low is about 20%. Almost 55 cents of every dollar is making its way to free cash flow per share, which you need to know is fantastic, because with the free cash flow, you can pay a dividend, you can buy back shares, they can reinvest in the business, they can make acquisitions, and they can also carry it as cash on the balance sheet. And their net debt, almost non-existent. They're playing around with it. They could just wipe out that debt if they wanted to. And they currently have $36 of operating income to cover every $1 of interest on their debt. No problems with Visa. And then I'll scroll down just a little bit for you if you want to see all the non-paying dividend stocks. Go ahead, pause the video, check it out. We even got at number 17, Victoria's Secret in their ticker VSCO. So these picks will also be in this tracker spreadsheet, which you can click on the link below. So hey, even if you're watching this video 6 months from now, just click on it and we'll see how they did, yeah? So I'd love to know if you made it this far in the video. Give me a rocket ship or an eggplant, whatever you want to throw on there. It's our channel. Who cares? But seriously, let me know if you found this helpful. If you did, give the video a thumbs up. Consider subscribing. Give me some input and ideas on what you'd like to see covered in the channel. And in this floating little box next to my head, I sold something that I had made a mistake on, and I recently found out during one of our live streams. So click that video and I'll tell you what I sold and what I bought over there.